What's going on, guys? It's GBP baby. Welcome back to another video. Welcome back to a new week. After last week's atrocities, it's definitely exciting to finally start a new week. I am definitely looking forward. And yeah, before we get started, I highly suggest you go and join the Discord, join the mailing list and smash subscribe, just because I've got a lot going on. But yeah, nonetheless, we're going to start on the monthly, and you can see that we've already had quite a nice expansion to the downside, as on the back of non-farm payroll. So generally speaking, I am expecting a down close month in August, and also the seasonal tendencies also suggest that dollar tends to close lower in August, in the month of August. If you want to get access to seasonal tendencies, you can join the Discord server, as I have them in there. But yeah, let's start looking at the monthly as to where we want to see price continue to draw to, and that can help us with a basis as we drop down to the low time frames. So you can see that we've traded now to the 50% level of this wick, which is what we call consequent encroachment, and you can see how we've also closed just below it as well, which is quite interesting. Another thing to take note of is that if we look at the complete trading range that we're in, so from this low to this high, you'll see that we've also closed below the 50% level of this trading range. So this is our current trading range. This is what we call internal liquidity because we're inside of the range. And now that we've closed below that 50% level, I need to start looking at this 75% level as a potential draw. Also, this 50% level should now help us frame a potential resistance point that price can use to bounce off to potentially send price lower. So let's get that marked out first. I am going to keep this very faint just because it is a higher time frame PD array and it's not exactly, it's not as precise as say the daily and weekly for the short term trading that we do. But nonetheless, we'll have it marked out and we'll make it dashed. And I'm just going to put monthly, what is it? 50%. That's 60%, isn't it? There we go. And then basically I'm going to be looking around this level as we drop down to the weekly, daily, 4 hour, etc. to see if there's any PD arrays that price may want to key off to maybe create the high of the month, not high of the month, sorry, but like, you know, high of the week, and then use that to help send price lower. In terms of targeting, I do want to see price draw towards this low. It doesn't mean it necessarily has to reach there next week, as in this week. It doesn't necessarily have to do that. We have like 3 weeks of August left. However, this is my general draw liquidity, so that's going to help us ideally stay on the right side of the market. So based off that now, we can drop down to the weekly, and you can see we had beautiful displacement to the downside, closing again below that 50% level, below this swing low specifically, and also below this low. So we're seeing a willingness to want to go lower. This is clear displacement, clear willingness, and expansion, right? Now let's start looking at PD arrays that we can see on the weekly. Here, there's a very obvious inversion fair value gap right here between this high and this low. If we drag that out, this is now an inversion fair value gap. Now, why is this an inversion fair value gap? And I'll explain that very shortly. Let's just write IFVG. Make that a bit bigger. And I'm also going to mark out the midpoint of that. Now, this is an inversion fair value gap because price delivered on the upside, creating the fair value gap. And then if you remember last week, I was expecting us to trade down into it, which we did. And now you can see that we've also closed below it. The fact that we've closed below it means that if price retraces back into it, we're expecting it should therefore provide resistance. So again, we can start looking in this range to ideally find some kind of PD array that may want to help us create the high of the new week, since we're expecting a down close week, to then key off to send price lower. We have a rejection block level right here. Let's get that marked out as weekly rejection block. And this will be a nice target for this week for price to get down to see if we can get to this level right here. And then the highest I'd want to see price trade for me to remain bearish on dollar would be the midpoint of this inversion fair value gap. So let's just actually I'm going to put a W here. And now let's drop down to the daily. And what you'll find again, back of non-farm payroll, crazy down day. So what we do also have is a breaker. We have a high, we have a low, we have a higher high. Yes, there's a lot of consolidation, but high, low, higher high, and then displacement. So we anticipate price to return back to the last down close candle, which just happens to line up with the midpoint of that weekly inversion fair value gap. So this is adding confluence to our willingness, our wantingness and willingness to want to see price trade higher to create some kind of high, and then use that to key off. So what I'm going to do is I'm going to look at, I'm going to keep an eye around here. I am looking at this candle. I'm not going to draw it out just because my screen will get very messy, but it's nice to see that lines up very nicely with that 50% level. You can see on this side as well, We have a low right here, that price we want to draw towards. And then have we filled in this fair value gap? Let's take a look. We haven't quite filled in this fair value gap. So we might find that this fair value gap needs to get filled first before we actually see that high get made. So what am I expecting? Well, ideally, Monday, Tuesday, Wednesday, we see some kind of rallying. It doesn't need to rally straight off the Monday. Like we may trade lower on Monday and then rally Tuesday and Wednesday to create that high. But my point is, I'm looking to see that high get made early in the week for us to then key off and trade lower. But the fact that we haven't filled this fair value gap and we've had this massive displacement, I wouldn't be surprised if this was trying to get filled. Nonetheless, let's drop down to the 4 hour, get a closer look. And again, we're looking at the last down close candles. So I'm going to drag this out because these are the last down close candles. And this should be our breaker. Let's see. And it's also the midpoint of this fair value gap, which is what we call consequent encroachment. So this is where I want to see the high of the week get made at the very highest. And then I'm looking for us to trade down into that weekly rejection block level. If we don't manage to reach up here and we only trade to say this monthly 50% level, which you can see is the 25% level off this 4 hour fair value gap. If we only manage to trade to that, that is even better because it shows level of weakness, and that again will help us with our trading ideas. So we'll have to obviously wait. I always wait for Monday to trade before I start thinking about this level of this level of precision. But generally speaking, I know this is the very highest I'm willing to allow price to trade before seeing us trade down into our weekly rejection block level. So I'm going to keep it on the 4 hour just because that's the lowest I like to go on Sunday reviews. And yeah, hopefully it'll be a pretty simple week, especially after the amount of manipulation we saw last week. And you can see the past 2 weeks, last week and the week before, was just full of consolidation. But when you look at it like this, it is just classic price action, you know, in terms of consolidation, run on stops, displacement to the downside, return to breaker, and then expansion. So it is, when you look at it, hindsight's a beautiful thing. When you look at it in hindsight, it's all very clear. However, obviously in the moment, it can be very tricky, and obviously trading gets a whole other story. But at least now we have a point at where we're happy for price to return to. Any higher than that, whole other story. Highly doubt it will happen, because I'm expecting and anticipating a down close week. So yeah, that's going to be everything on dollar. I hope that all makes sense. Again, if you don't have the seasonal tendencies, make sure to join the Discord because you can get access to those. But again, what I am paying very close attention to, and I'll talk about this again, is the fact that if we look at this fair value gap between this low and this high, the midpoint lines up with our breaker, but price doesn't even have to get up there. And if it only trades to this 25% level, that shows more bearishness, which supports our bearish bias and will help us find setups. Again, I like to let Monday trade, so let's let Monday trade. Tuesday, Wednesday, Tuesday and Wednesday, we need to start thinking, okay, where's this high going to get made? Assuming Monday doesn't do it. Let's say Monday does trade here and we see displacement. That will be obvious to us. I still wouldn't trade the Monday, and we can talk about that in tomorrow's video. But nonetheless, I know that between this 50% level and this 25% level, this is where I'm looking to see price create the high of the week. So that's going to be everything on dollar. Let's now head over to GBP USD, and we'll start here on the monthly as well. So obviously, if we're expecting lower prices on dollar, we want to see higher prices on GBP. Now, here's the monthly. I am going to mark out the consequent encroachment of this large wick as our first target. Once price gets to that, if that happens, that's great. But I mean, like, after we reach this point, then and only then will I think about the high. But first, it needs to try and get to the consequent encroachment. So let's get that delineated as our monthly target for buy side. I'll put monthly CE for consequent encroachment. And then on the downside, you can see we've traded down into a bullish order block and obviously got a reaction off of it. This is what we call a propulsion block, assuming price is to trade on higher, which is what we're anticipating. Now, I'm not going to mark anything out just because of how consolidated it is, and there's not really anything specific on the monthly right here that can help us. So let's go to the weekly and see what we can find. And you can see how we traded quite deeply, into this fair value gap right here, which was anticipated, but it's interesting to see how deep we traded. So if we're expecting a down close week on dollar, we should anticipate an up close week on pound. Now, what's interesting is that you'll see that last week had a down close week in line with dollar. Now, this isn't ideal because when dollar trades lower, we expect our pairs to be trading higher. And obviously that's not the case, is it? So things like this, it's usually reflective of, manipulation for one, but also it can be a matter of events that are happening in the world. And we know there's a lot going on right now. So with that taken into account, I'm not surprised that we're seeing things like this. And it does happen occasionally when you do have pound closing lower with dollar like that. So we just need to be wary of that. And what we'll find is that eventually pound will either have to snap into place and start moving and running higher aggressively, or the world's ending. So let's look at this fair value gap that we traded into. The fact that we traded into it now with this wick, we didn't quite fill it. But again, I guess we could look at that as a level of bullishness. The fact that we have that gap left open, we can see that as almost a hint of bullishness, which is what we want. So whether that justifies our means, it is what it is. But now I'm going to pay attention to this wick. And you already guessed it. I'm going to be looking at the consequent encroachment, because if we are bullish, price should respect consequent encroachments. It's as simple as that. So let's get that delineated as well. And we'll put weekly consequent encroachment. And that means that this is the very lowest I'm willing to let price trade on pound, for me to remain comfortably bullish on it. Oh, excuse me. Now, obviously, once we get to the daily, we need to take a closer look. But generally speaking, that's how I'm looking at that consequent encroachment. And then in terms of premium PD arrays, we have a beautiful fair value gap up here, right at our monthly consequent encroachment, that I'd like to see us try and reach for later on in the week. And it's above a weekly high, which is a significant swing high. So let's get that marked out. Now, it's probably going to have a very ugly way of delivering this week, just because, like I said, we closed lower with dollar, which is not ideal. And again, which is why I allow Mondays to trade. But anyway, let's go down to the daily, and you'll see how we came down, tap down into this, left, creating that fair value gap I was talking about. You'll see there's another fair value gap down here on the daily as well. Let's take a look at that. And what I want to bring your attention to is look at how volume is sitting on top of it, and how we're respecting that 50% level. So the fact that we respected the 50% levels in price traded to it and left it is quite bullish and, supportive of, willingness to want to go higher. But also the fact that that volume is sat pretty much above this fair value gap, like so. When you see price turn like that and close with this much bullishness, we're tracing back into its range. It's like a signature in price. So that's why I have this marked out now to say, okay, if we get back below there again, it probably means we are more bearish than I expected, and so be it. But generally speaking, there should be no reason for us to come back down here. We've already mitigated it. So I'm going to get rid of this now just to clean up the charts. We don't need that. We're still paying attention to this weekly consequent encroachment. And now we can drop down to, actually, there are some relative equal highs, this high and this high. But I think the 4 hour will be better for us right now. So let's take a look at that. And then we have a beautiful 4 hour fair value gap. Again, lining up nicely with our consequent encroachment right here. So it'd be nice to see if price can come down here, maybe on Monday or Tuesday, to create the low to then trade on higher. So I am definitely going to be looking in this range. This is a very large range. So let's go to the 1 hour, see if we can find any potential PD arrays. And then this is the last up close before the down move that caused the expansion. So in terms of breaker, I'm looking at this level right here. But I do think it's best we let Monday trade. Let's get this 4 hour fair value gap marked out anyway, actually. Just because we expect price to trade into it, it's not very not very specific right now. But like I said, after Monday, we should have a much better idea. But I'd like to think that this consequent encroachment can hold price up. Beautiful relative equal highs up there. Look at that. And then that buy side liquidity pool I was talking about. And this was that fair value gap that we're expecting to get filled. And then that monthly consequent encroachment to get reached into. Now, this is all assuming that dollar does as I'm expecting in terms of creating the high at this 50% level on the monthly. Let's just bring that to the front. And then finding displacement and trading lower. This is why it's so important just to let Monday trade, guys. Like, I can't preach this enough. It's better to just let Monday trade. Let's get an idea of how price is moving. And then we can start to readjust ourselves, because there's going to be a lot of people and a lot of retail that is going to go short right now, and they're going to get absolutely, obliterated on the Monday. or they'll even go long now, and maybe they'll rally, and maybe they'll get in on the move, or the the high getting created, and think this was a bottom, quote unquote. But this is why I let Monday trade, and then I start to readjust accordingly. So same on pound, we just need to see how it treats this fair value gap. Again, I'm looking at the 50% level. It should respect it if we're bullish, and if that's the case, we should be in for some nice setups to run up into our buy side liquidity pool. But we wait for price to deliver. It's not we don't chase price. We we are very proactive with price, not reactive. So let's now head on to Euro USD, and we'll start on the monthly here as well. Again, I'm going to say the same thing. If we're expecting lower dollar, we should be expecting higher euro. Now we're very close to this high, so I am expecting that monthly high to get taken eventually. We have a high over here. Euro is very ugly right now, I can't lie. So let's get that marked out as buy side liquidity. And this is still a bullish order block, because as soon as this candle traded above it here, makes this a bullish order block. So really, we should keep an eye on that, but I think the weekly will hopefully give us some more insights. So there's that buy side liquidity target. Here we came down into a fair value gap, and look where we traded to. 50%. You can't make this up, guys. This is what we call consequent encroachment. There's a reason I'm always marking out 50% levels like this. It's because we want to see them get respected if we're to trade higher. We have another bullish order block right here. Why? Because as soon as this closed above it here, makes this a bullish order block. So in fact, let's move this here. If price trades back into that, I'm expecting a strong reaction to send it higher. Any lower than the 50% level, the 50% level of this order block, which is what we call mean threshold, so any lower than here, then we're probably bearish and we're on the wrong side. It's as simple as that. And again, Monday's going to help us with that, because if we don't trade into this on Monday, and then we see some bearish price action on the Tuesday, we can expect to be trading down into this. But we'll talk more on that later on this week. So let's get that delineated. Now we've got the mean threshold, which is the very lowest I want to see price trade. The opening, which is where we expect to find, a potential setup. And then we have our buy side liquidity target up there, and then here as well. So let's now go to the daily. Beautiful expansion. There's that bullish order block open. I do believe this is what we're going to call a reclaimed bullish order block, but I'll talk more on that later this week, assuming price does as we expect. Let's see, what can we find? There is an inversion fair value gap where this low to this high, drag that through, and that's an inversion fair value gap, the same way I was talking about on dollar. Why? Because we delivered on the downside, creating a fair value gap, and then we've closed above it on the upside. So if price retraces back to it, we expect to find support at that level. Any lower, and it's probably a different story. 4 hour, crazy expansion, but again, as price trades back down into its range, into itself, and we have a beautiful consolidation here, that we should grey out. We expect reaccumulation at these points. Look at this. When I see this, and we've traded and closed above it like this, this is a consolidation. We expect price to return to consolidations. It's not unusual for that to happen. It's just that because we're on the buy side of the curve, quote unquote, we expect it to provide support. So that's why I'm going to keep our attention on that. As price, if price wants to retrace down into there, we're expecting again dollar to be making the high at the same time, and then potentially giving us setups. Now you can see GBP is the one that's misbehaving here. I don't know if something needs to happen in the UK, and don't get me wrong, there is some stuff going down in the UK right now, but you can see that GBP is very weak and is lagging behind. So something's going to need to happen to either snap it into place, or GBP is hinting towards something which euro and dollar doesn't know. Yeah, my point being anyway is I want to see the low of euro. Assuming we're having an up close week, I want to see the low of euro get made on Monday, Tuesday, Wednesday, ideally above this inversion fair value gap from the 4 hour. Again, we have a bullish order block on the weekly right here, so that should be sensitive to price. And once we're inside that, we can think about accumulation. But we're gonna let Monday trade. So that's gonna be everything, guys. I hope that all makes sense. The Monday after non-farm payrolls tend to be very volatile, and you can get in on some gorgeous moves. And like I said, it won't surprise me if the low is made on Monday, because I've seen it happen before, and it very well could happen today. And if that's the case, so be it. And we'll just get in on that. But my point is that generally I want to see up close week, meaning that I'm looking for the low to be made Monday, Tuesday, Wednesday, and these are the PD arrays I'm using in order to help frame where this low could potentially get made. It's not me calling the low of the week. It seems like it, but it's not me calling the low of the week. It's me waiting to see how it treats these levels. Once it gets there, depending on the day, depending on the time, and depending on the sentiment around it, then I'll figure out, okay, is it likely that we're going to reverse here? There's also things that we can look at on the lower time frames, as in the 15-minute, etc., that can then help us frame if it's likely to turn. Because if we get a reversal and it's the right time of day, then a setup will likely form after that we can get in on the long and expect to run higher. So it's not me. This isn't me calling the low and saying I'm going to buy here. It's me waiting for price to get there, looking at the reaction, looking at the time of day, and then reacting. We are proactive, not reactive. So that's going to be everything, guys. Don't forget to smash subscribe, join the mailing list, drop a like, drop a comment, join the Discord as well. And yeah, I'll catch you tomorrow. Peace.